Ignatius with bells on. Guys, with any luck, and I've got my fingers crossed, my toes crossed, and just about everything that I can possibly do, it should be true that we are now live on YouTube, which is kind of late, we do know, and apologies for the tardiness in joining you. Technical hitch, I've got to say, and we're actually trialing the new system for next week, which will, of course, be a little bit different to the previous broadcast that we have been doing. Ash, have you got anything urgent, or shall I just place the pound trade straight away?
Yeah, we could be quite urgent this actually, mate.
All right, go for
Yeah,
you, mate.
let's quickly have a look at the FTSE because there is an opportunity to get into this short now.
I'm trying to stop sharing. But oh, you did it, magic.
I did it. Yeah, I'm all there. So
Awesome.
now I don't know. Is everybody there? We don't seem to be sharing on that correct channel, do we? So let me just double check. I've got the right thing here.
I think we'd have to be on the previous one. God, if we can't find our way in here, the poor people.
Okay, don't see anybody. Okay, oh, that's not good. Okay, so we've only got 3 on this channel, and we've got about 30 on the other one waiting for us. So
I've got 34 in the room.
But are they seeing my screen?
I can't see your screen, no.
No, so I got a feeling that that's the old one, mate, that we just started. Anyway, you could direct them over. Because
really?
actually we're live. We are live on YouTube, but not there.
Where do I direct them then?
Here. Let me give it to you. Hold on. Oh, I don't know how you do it though. That's going to
Mark
be
or
tricky.
Kumar, LT, Fad, if you guys can hear me, could you please type something into the chat? If you can't, then obviously I'm in the wrong room.
Yeah, I've got John in my room. I've got Swee in my room. Yeah, they're on the other channel, Swee. You're right. I don't know how to bring them over. Stanley, I've got in.
Okay.
Anyway, oh gosh, we better get to this. Let me tell you guys. So we're looking at a shorts here now. It's going to be worth waiting for this first bar anyway. Daniel's in, great. Okay, we got a few people here with us. We want to wait for this bar on the 15. You can see that there is some resistance here on the daily. Now I do expect we may well still get up to this point here. So I am suggesting a scale in here with an add point up here if we start coming through. Okay, so if you guys want to follow this, then you are trading this point here, and then if it comes through, you're still keeping this trade down here and adding here. So the way you need to calculate this is stops can be probably above this level here. So we're looking at quite a wide stop at this particular juncture. So let's call it 1% is 200 pips. If 1% is 200 pips, then we only want to put on 1/3 of a percent here, and then put on the other 2/3 here, or maybe a third here. And if it starts dropping again, then we'll put on the other third somewhere in between. But yeah, this is more than an attractive area to try and scale into this, to try and get into this on the short side. So if you guys are in and you want to try and get into this, then this one is a goer from here. Shame, and really we want this price up here. I'd quite like a bit more of a rally and get us up to this point. How you doing there, Jeff?
Yeah, I'm trying to get these guys out of the room they're in and into the other one.
Okay, you managing to leave messages?
I'm trying.
Great. Okay. Yeah, do apologize, guys. We've had we are trying to migrate over to the new system for next week. So we had a little bit of a test this morning, but it's obviously hasn't worked very well. So what you're waiting for really is this 15-minute bar. Now you guys know some of your bars, but look at this 15-minute bar. This 15-minute bar is an engulfing bar, taking out the high, taking out the low. So, you know, with a bar like this, you are looking for a 50 pip trade, which that is okay. If you want to play it that way, that's absolutely fine. But if you're going to put that on, then you have to be prepared to get back in here. So there's one of two ways you can play it effectively. You can either enter on the bar, on the low of the bar, on a 15-minute bar. You enter at the low of the bar where you stop at the high of the bar. And if it takes you out, you're looking to enter again. No problem with that. That's absolutely fine. And also, if what you can do with that is still enter a third or even a quarter of 1% between this point and this point. So that's a quarter of 1%. And then if it takes you out, you are going to go in slightly, you know, you're going to use the whole 1% over the course of the trade. And if that ends up taking you out to the upside, then you're going to consider either adding a quarter, you know, if the price is slightly high, you've lost nothing because you're going to be above the stop. If it's meandering around here, then and you like the look of it, you're going to look for the setup again. Then you're going to go in at a half. But remember, you've only got you know, if you go in at a quarter, you've effectively got 3 more to spend. So you've got to spend them wisely if you are going to spend them. This bar would look actually pretty good for an entry and a stop just above. So that might be a better option actually. Going at a light trade here, quarter of 1%, at the low of the bar, stop at the high, see where it takes us. Now our target is still down at this point. So we're still aiming for about 200 pips. So we're looking at around about 250. We're looking at about 5 to 1 off this particular bar. Okay, now the bar has closed. Sorry, mate. Now you wanted to go with the pound, didn't you?
Yeah, we just had a few more pop in. If you want to repeat that, mate. I'll check on. I haven't even looked at it yet.
Okay, no problem. All right, yeah, Kumar, we're seeing the guys are in the other channel. We're just trying to get them over now. We just tried to migrate over to the new system, but it looks like it might have failed. So I'm going to give you this trade again, okay? We're looking at 15 minutes candle. We're entering at the low of this candle with the stop at the high of the candle, but we're only going to enter at a quarter of 1%. Now, the reason for that is we are short and we are fundamentally short right the way down. We're not worried about the longs at all. But if it takes us out at this point, I want to get in again up here. Now, I did say that you could put on your 1% here where you stop up here. That is another way to play it. But let's play it this way. So you're entering at the low here. 1 pip below this particular candle. So you should be in now, I think. I'm not sure if it would have taken you in just yet, but you're pretty close. So you'd be pretty close to getting in. Quarter of a percent of the account from the entry to the stop at the high, which is around about 50 pips by the looks of things. Okay, from the low to the high is around about 50 pips. So you've got a 50 pip stop loss on this, but a quarter of a percent. And if it takes us out and goes higher, we're going to look to enter again here. So we're gonna not worry about our quarter of 1%, enter again here. And we can also put in a quarter of 1% here, because as long as we are above our stop loss price, when it comes down to the stop loss, we're back in the money again. So that quarter of 1% won't make any difference to us. But you're going to be in now anyway. So you should be entering in this trade should be entered. 50 pips to the upside should be your stop loss. And now we are looking to get a 5 to 1. Now, if this does start to come down and we get our stop loss relatively safe, if we get the chance for it to pop down, what we're looking for now is for it to come down to a level and bounce. And if it can come down to a level and bounce, let's see if we can get our stop fairly safe. So if it comes down here and bounces, and the bounce is more shallow, when it comes down, we're looking to get our stop at a break-even level. And what that will do is dictate how much we can put on the next trade. And what we're trying to do then is wait for the break and add the rest of the positions from there, at that point there. And potentially using the profit from this point here to this point here to add. So it should be relatively cheap, if not free, to be adding extra positions here already, free at this point already. Okay, the first one. So let's see how the first one rolls out. So you guys should be in this trade now. Hopefully that made sense. And we'll see how we go. Now, you want to definitely make sure. What's that, mate?
I just said, righto, I'm ready to place the pound trade when you are.
Brilliant. Brilliant. Okay. Let's go. Let's pass to you then. Well, in fact, mate, you can steal from me, can't you?
Looks like it, yeah.
Yep.
Magic. Righto. What do we got here? And sorry again, guys, for the late start with the technical issues. We have had an interesting first 10 or 15 minutes. Okay, the range today is the last 3 bars, as always, last 3 1-hour bars prior to London Open, which are this one, and this one. So again, we've got a true range of those 3 bars, the low of this one and the high of this one. We'll put let's put the long in first. And what we have here is a high of 1.25145 becomes 1.2515 plus 15 gives us 1.2530. So that will be our entry for the long, 1.2530. The stop loss for the long will be 10 pips under the low of this bar, which is 1.24 rather. 599 becomes 1.2459 minus 10 becomes 1.2449. So 1.2449 is the stop loss for the short, for the long. That will also be the entry for the short, and this will be the stop loss for the long. So we'll remember those: 24.49, 25.30. 24.49, 25.30. So we place the short. $1.2449 and 1.2530. We had a welcome winner yesterday on this one. Didn't quite get as much as we might have, but not too dusty. We got taken out there, I think, by the look of that bar. Let me just confirm that before we go back to Ash. The owl, oh, you goose. I've got to mark my spot, don't I? It's like when you go fishing outside in the ocean. There's no point trying to guess where you were. It's all a matter of, okay, there's is that the 9 o'clock bar? It's a 10 o'clock bar. So we got taken in with this one, right? Then we were looking for 2 seller bars. We got 2 seller bars here. Sorry, that's the hourly chart. Hello. Right, so let's try that again and put our little crosshairs. It's actually that bar there, isn't it? 9 o'clock. 87. Okay, so 10 pips below there would have been 60, I think it was, wasn't it? So 60, yep. That rings a bell. So there's our entry. Then, of course, we switch to the 15-minute chart. And from there, where we got taken in with this bar, we then look for the next 2 seller bars. Sorry, we got taken in with this bar. Then we look for the next 2 seller bars. There's 1, there's 2. So our stops moved immediately to there. Then we got another 2. So our stops moved immediately to there. Then we got another 2. So our stops moved immediately to there. And what happened next? I think we got taken out there, didn't we? From memory. I can't quite remember. I set it on the EA after that. Potentially we did. I don't know, guys. Did we get taken out there? I'd have to have a look at the account to check that. Doesn't look like we shouldn't have, unless there were widened spreads. We could have gone a fair way down if that wasn't the case. Guys, where did we get stopped out?
What's that for? For the pound?
Yeah.
Oh, I wouldn't know that, mate.
See, if our stop was there, we never traded at that level, but the spreads might have killed us, might have taken us out. I can't remember. If not, then that's where our stop would be anyway. And then it would have moved down to there. Then it would have moved to there. Then it would have moved to there. Then it would have moved to there. I don't think I got much out. I didn't get this much out of that. I'm sure I didn't. Guys, I need a report. How did you go? Did you get all of that? Or did you get taken out with 1.25298? 1.25298. So pretty much on that bar. Yeah, which is the bar I was talking about. Shouldn't have. What a bugger. So the spreads took us out. Down.
Oh, yeah. Do you know what? I have noticed that some of these spreads have been widening quite significantly overnight, which is making things a bit tricky, isn't it?
Yeah, it's a pain, absolutely a pain. And like the high of this bar is 1.25352, and the high of that bar is 1.2508. That can't be right. 25342. So telling me it's the same. Can't be the same. It's definitely below it, isn't it? There's no doubt about that. $1.2459. God, tell me the truth. 1.25342 and 1.25352. So only 1 pip difference. So yeah, the spreads have taken us out, mate. It's as simple as that.
Yeah.
What a bugger. There was
nothing more frustrating.
There's probably double the profit in that had that not occurred. Anyway, that's life, and we can't argue with that. Unfortunately, the brokers are what they are, and without them, we wouldn't be able to trade at all. So pretty much in their hands, unfortunately. I wonder if that's on IFS. Don't know what it would have been like on Fusion, but I guess if you guys are all got taken out at that level, then pretty much the same, I would imagine. The numbers for today, John, are entry for the long is 1.2530. Entry for the short is 1.2449. We are in at 1.2560. Really? How can we be? How can we be? PL, what are we saying? Talk to me. We're not in, are we? No, we're not in.
We're in 1.2560. Let's have a look. 160.
Sorry, Helen. Yeah, a few people have the same boat. Mate, PL, I'm not sure what you're saying. Oh, yesterday. Right. Okay. Sorry, man. Yeah. Okay. All good. So yeah, we got a little bit back yesterday, which is, of course, what we're seeking. We just really need those nice breakouts to continue and our trailing stop to be honoured, if you like. Ash, before I go on, there's another 3 minutes to go, I suppose. I've got a few things to look at. I guess I better give you the order that I put in the market this morning. It is Euro US dollar. For those of you who are interested, it's a short. And pardon me, My entry is at 1.0853. Stop loss is 88 pips. Basically, I'm trading this bar here, but that's not the reason I'm trading, if you know what I mean. A few reasons. We've broken down the structure, which is this ascending channel. We've come back and all but retested it. But in the meantime, we've also broken the resistance trade line, come back below it and retested it. That is the sign of a false break to me. And for that reason, I always place an order underneath the bar that came back. And we've also got a nice little horizontal level coming across there as well. So a little bit of a bear on that particular scenario. TP1 I'm taking just before these lows, and DS2 at 61 pips from entry. TP2 I'm taking at the lows pretty much, 188 pips, and the rest can swing in the breeze. And if we're really fortunate, then well, you could take the lot off here if you wanted to, but I'd certainly advise taking most of it off. It depends on time, of course. If we sneak along here for the next week or so, then this, of course, becomes a little bit more palatable. But you can see clearly why I'm doing what I'm doing here with the levels. And TP1 and TP2 are very, very clear. All right, mate, that is me for now. Back to you, and I'll come back and go around the grounds when you're done.
Okay, mate. What if you just throw us over the screen?
Do I have to do that, do I?
Oh, I don't know, actually. Maybe not. Let me see. Yes, you do.
Yeah, this is
forever
logic.
Changing.
Where is this logic?
So yeah, we should now be in a FTSE trade to the short side. It wouldn't surprise me at all to see us up here, which is why we should only be in at 0.25%. So, and what we want is really, I mean, you know, it's one of those things that we have to take this trade, because if we don't, then we don't give ourselves the chance if this market does start to tank to come down. Now, I don't know if any of you see the inverted head and shoulders here on the 15, but it is there. So there's a chance that rather than us coming down, there we go. There's the arms there. Rather than us coming down, we go up just off the back of this. Wouldn't be the most surprising thing in the world. And we kind of want it to go up. Now, we don't want it to go up because we want to lose money, but we want it to go up because we want a better price. But we have to take the first trade just to ensure that we don't miss the bigger picture. And the bigger picture is that this market has got every reason to be coming down rather than going up. So there's our inverted head and shoulders. You can see that this would be the right shoulder over here. Now you can see with this one, with the inverted head and shoulders, the left shoulder is pretty much, in fact, that's coming up there, pretty much lower, just a little bit lower than the right shoulder. Now, this is a fairly bullish signal when the right shoulder is higher than the left shoulder, because it's showing us that we're not even able to come down and touch that lower level. So there's a pretty good chance we come through here. Now, the measured move is going to be between these two levels here. So if we measure that properly, then what we get is 56.84. Yeah, it looks like this area here. So we kind of get back to that area here. So 56.90, which we will do some analysis on now and see what we've got around that area. 56.90, just to give us an idea of whether that's the point that we are going to be adding again. $56.90 is there. Not a whole bunch on that. Not a whole bunch on that. There's a level there, but it's quite weak. I guess 56, between 56.70 and 56.90, you can see that there's just a little area here that gives us a horizontal level there, touch there, just a slight dip below there. And that really was our last area. So that brings us into this kind of zone here. So there might well be some resistance at this point here that might encourage the second trade to go in at that particular point. But our third trade should be here. Now, if it goes beyond the pivots, then we're done. We are not looking for downside anymore until, probably quite a bit later in the picture. Still bearish. I'll still be bearish, and I'll still be bearish until we come right down and touch and test those lows again. But for right now, we can probably just sit on the sidelines and wait for, if it gets through this level, sorry, we'd wait for the market to turn around. Hold on a minute. Does that give us 57.90? Yeah, that's not too bad, actually. There is a level along here. 56.80. So there's that. So that's going to lead us in there, depending on when it touches. That leads us there. This is an hourly. That's going to put us there. That's going to put us there. We need to see signs and signals in that area. Let's just put in a fib as well. Yeah, there's a 38% retracement there as well from the lows by the looks of things. So, few things that that do exist in this area here, right on top of 56.80. So between 56.80, 56.90, it looks to me like that could be our next resistance zone. So we're in here. We're going to allow ourselves to get taken out just in case the market does decide all of a sudden just to come down. If it does hold up here and go higher, we're looking at around about 56.80 on the futures, which is 50 pips above where we are now. So on the cash, it's going to be 5,700. So your line should be around about the 5,700 level. Now, if it goes beyond that, I'm not going to be too concerned with the trend line, but so I will just have one last gasp attempt here at the pivot. If we get in here, stops above the pivot. If we get in here, stops above this area, and we're just going to edge in. So 0.25% here, making up for that one and some, making up for this loss and some, and 0.5% here, which is our. So we're actually putting in the most in at the top end because we are going to be looking for this for the higher end to kind of stack in. So small. Bit bigger, so double the amount, but that will spend our 1%, but that's going to give us a pretty good chance. If we are right, it's going to come down at one of these three levels. If we are wrong, the likelihood is that things turn around and we go a little bit higher, and there's another level a lot further up for us to get in. 66,000 would be my first other major short. We didn't quite get there, so we got to 5930, didn't quite get there. So that is what I'm looking at, mate. We're just going to sit tight and see if this trade works out. And if it doesn't, then we're going to go slightly higher. Now, Ashtead, which is a company I'm interested in shorting, is just above its daily pivot right now. And I'm just looking at some numbers on that as well. And that one is, yeah, that one's in the balance. So it doesn't look like a day for us to be shorting that. Now, if we look at the FTSE 100 under the hood, we have got.
Just while you're doing that, I'll just verbally give these guys the levels. Faye, the stop loss is 88 pips, so I'll give you that exact level. Now, what happens here is when we get taken off and we get slipped. So the level is 10941. Let's go 10941. Yep, that makes sense. That is your stop loss on the euro dollar, whose entry is at 1.0853 as you have. Okay. Thanks, mate.
Great stuff. Okay, amazing. So where was I? Oh yeah, just to kind of have a look under the hood right now. We got 80% of stocks actually in positive territory. So at this particular stage, it doesn't look like this initial short is likely to work out. Actually, quite a few of them, some of those travel stocks, again, doing pretty well. I'm not sure if that's off the back of the deal done between the American government and the travel industry or not, but going down. Banks actually doing okay again right yesterday after seeing some pretty poor numbers coming out of the States yesterday. But with 80% doing okay, you know, you can get a pretty good feel that most stocks are actually, well, in fact, 80% of stocks are in positive territory. So they're all doing all right so far. Pretty sleepy. Let's have a quick look at the news and data for the day and see what might shape the day as we go. And I wonder why. I wonder whether this might just put us on hold for a little while. This isn't the worst thing in the world. What do we have? Unemployment claims out of the state. So I suppose everybody's going to want to see if that that gets down below the 500 million mark.
Mate, did you see the Aussie numbers?
No, where are they here? Unemployment. Well, goodness me. Gosh, they're holding up. How are they holding up so well?
Yeah, it doesn't make sense. I don't know. I can't answer that question at all, given that's the entire month of March in there.
And why is the Aussie not flying?
Another good question. I don't think the market believes that number, especially the 5.2 number. That doesn't make any sense at all. But you know, they're there. The numbers are posted. So if that was in inverted commas normal times, as you say, the Aussie would be you know, 80 cents at the moment against the dollar, one would think, or certainly 75. But yeah, something, and when it's not, you've got to say, well, something else is going on, and that speaks.
Possible that the pandemic hadn't quite taken hold at that time. It's 15 days after the month, so it's actually the numbers for March, which, you know, we were in it then.
We were certainly in it, no doubt about that. And Australia were one of the first to implement the wage subsidies, I suppose, is the best way you could call that. But you can't imagine, well, maybe you can imagine that those wage subsidies have been enough to keep all those people in work. It's fathomable.
Yeah.
But there it is. The numbers there. I can't. Yeah. How can you argue?
Well, you can't argue. I mean, it's lagging to a degree, but so yeah, I totally I completely take your point on that. Okay, standout number for today. That's quite something. German WPI. That one.
Mind you, next month it'll be double that.
Well, double the crash.
Mm. It'll be 10.4 or 10 plus. You can.
This is the thing, yeah. This is the thing.
Bet a little. Bet you bippy on that.
Yes. Changing the price. Interesting. This, you know, changing the prices of goods sold by wholesalers, and that's decreased in Germany. I've looked at a few of these numbers, some of these price numbers, and generally speaking, things are coming down. Everybody's kind of, you know, me included. I was looking at gold as a hedge against inflation, but those inflationary factors certainly aren't filtering through as yet. PPI, you know, some of these inflation numbers just actually aren't just not there. They're not evident at all, which is quite interesting. You know, things haven't changed yet. I mean, in saying that. Just last thing on the FTSE actually. Now the reason that we're not going to change our view about this coming down, it can pop up as much as it wants on an hourly chart, but remember what we're looking at is this daily. When we were looking at this kind of evening star pattern-ish, but what we do have is a push up. We got the inside bar, but most significantly this bar, which does lead us down here. Now, if we look at this on a daily, then you know, the actual pattern is a high, a higher low, a higher high, and potentially a higher low. So there's no doubt that that there is a wider, you know, the broader picture is still us trending to the upside, and that's fine. And if we get a few bars down here which suggest that this is holding and we're going higher, that will change my perspective on the timing of this coming down. But as LT pointed out, it does have a bit of a look of a sentiment cycle. I don't think this has gone through this high significantly enough, with a hold, because really you want it to go through, hold, and then go. That hasn't happened. It's gone through. It held. You could definitely argue it held because this bar did not close below this price action here. But yesterday's bar actually gets us right back into the range again. So this looks like a potential top of this particular run. That's the way that the bars are starting to form at this particular stage. At this stage, that's what it's looking like. Now, that doesn't mean that we can't get something similar to this up here. This looked like the low. It came up, but then all of a sudden we start to see a turnaround. We get some bars which are suggesting, hold on a minute, maybe this has got no further to go after the low. Same thing. We got high, comes down. Are we going to get a few bars which are suggesting actually this is as low as we go, and we still continue higher? That could happen, but for right now, we're going to look at the longer term picture, which is really the weekly and the monthly, to stay with the direction of that particular movement, and then look to see if we got signs and signals of it turning on the daily. And we do have those. Now, if I bring in the S&P as well, what I quite like about the S&P is this weekly chart. Quite like the weekly chart on the S&P. Can I make this a bit clearer? I think it's better like this. I know you can't see quite as much, but I like this because what we had with the S&P was this kind of going on. We had this low, then we had this low, then we had this low, then we had this low. And then we took off. So we had that low, we took off to the upside from here all the way up without any pullback. You can see these pullbacks here. So that was our first low. There's our second low. There's another low here. That was really a last pullback. And then bang, we went to the upside. So when we've come back down again and fallen and fallen and fallen and fallen and fallen, as we've pulled back again, we're kind of pulling back into this area here, which was our previous low before we really took off. So that's why I like this area for a potential move down. Now, this is when people talk about the V-shaped recovery, this is what they mean. They mean this here. Just so you guys understand what a V-shaped recovery is. Market comes down and it comes straight back up again, rather than going down and doing this. And then coming back up again and creating a general, a more normal is the wrong word, natural, I suppose, natural price progression. That's the sort of like the naturally price progresses like that on the majority of occasions, testing levels. But V-shaped recovery, it doesn't test at all. It's just down and up again, bouncing down and up again. Some people are calling for that. Not really sure why, and I don't know where they get their where the opinion is formed from. The data at this stage has not suggested that. The pandemic isn't suggesting that to me, so I don't know where that comes from, but that's what we have. So I like the look for downside. So that's why we are aiming down. That's why we are already in the short with a FTSE. We should already be in our short with a FTSE. Now, if you guys got a little bit late with your short, you've got an even better price here. But you should be short with a FTSE, but only at 0.25%. And then adding as we go higher potentially. Okay, could still fail here. Barometers don't suggest it, but these are ones that you just have to you have to get into. You've got to trade this, because if you miss it, if you miss it while waiting for higher prices, when you could have taken a bit of a chunk out, you'll be pretty annoyed at yourself. Stocks were around about 80% about 10 minutes ago. Now they're at 70%. So we are starting to see a little bit of weakness come through. They'd have to be, closer to the 50% mark for us to have more confidence that we are going to genuinely start to drift from here. So there's still probably a fairly decent chance that we're going to get taken out with our stops at this stage, and we probably do go higher. But we as I say, we've got to trade it just in case. There's a decent enough setup. We are looking for the longer term shorts. I've just shown you the S&P and the I don't think I showed you the Dow, but it is basically the same picture on the Dow, where we've got the weekly charts giving us a decent level, to look at for the shorts. Could probably do with a little bit higher with the Dow, actually. Yeah. You see, with the S&P, the interesting thing with the S&P is it's just the lowest end, the lowest point of that last move. That's where we've touched. So it's a decent level to look for the shorts on. But that's what we got, mate. Anyway, we are in the trade short with the FTSE 100. We're waiting for the FTSE to either come down a little bit more or pop up a little bit more, so we can go in again. But we do have our trades in the market anyway, and we're still going to look for around about the 53. What did I say yesterday? 53.50. So we're still looking for around about 250 pips here off a 50 pip stop loss.
Happy days. Helen and Faye, I assume you're talking about the FTSE Ash. Is that, have you set a sell limit on the pivot, have you?
No, the way we entered it, I mean, you guys can enter where you want. Now, if you haven't entered this and you missed the first explanation, then let me just go over it one more time, because I don't want you guys to misunderstand about the idea here. You 1/4% is what I'd advise. That's what I would suggest. You're going at 1/4% here. Stop loss at the high of this area here. Yes, the sell stop was down below this bar when we first got it. So anybody that's in this morning that decided to enter the trade, they would have got in at the low end of this bar here. Let me just blow this up a little bit for you guys. They would have entered a 1 pip below this bar here with a stop at the high. Now,
Sell
if you get in here
on the euro,
sell stop, yeah, that's sorry, yeah, on the euro as well. So that would have been a sell stop. Now you've got a slightly better price, so you just want to go in at market now. You may as well go just to get your trade on, but make sure it's a 1/4% between this point and this point, which is about 40 pips, which means you're going to get better than 5-1 if we get to our target. Now, I suspect there's a pretty good chance that we take out this level. It wouldn't surprise me actually to see this market going higher and taking us out of our stop, which is why we're putting on a 1/4%. The 1/4% is to get us into the trade short, just in case it does just want to tank from here. And it does want to come down from here, but there's a chance we take this area out and we get up to that area I was talking about earlier, the 56.80, and if we get in there, we're going to put in another 1/4% here with a stop just above this area. Now, if the market comes up again, at this point we are going to again wait for signs and signals of reversal, and if they come here, then what we're going to do is add our the other half here. So we got 1/4 going on around about there on the trend line, and a half going on here. So we're just going to scale in. This one will get stopped out, and we're going to allow ourselves to get stopped out. No big deal, because if price comes up beyond this point, as long as we get a higher price than our stop, then as it comes back down again, we make the money back that we'd lost on the initial trade. So no big deal. But we got to go in light, because I think there's a pretty good chance we get taken out here and we go a little bit higher. It's not the best area. I think that's my issue with it. It could do the area could be a little bit better for us. I like I really like 56.20. Sorry, 57.20. So 100 pips above here, brilliant. That'd be really good for us. But if it's 50 pips above here, then fine. We might have to start edging in again from that particular point. So Make sure you don't risk 1% of the whole move. So the V-shaped recovery we see on dollar yen, does that count? Let's have a look. Yes, absolutely. Really, really good spot, LT. That's absolutely what a V-shaped recovery looks like. So LT saying that what we have here on the dollar yen on the daily chart here counts as a V-shaped recovery. Perfect. This is the perfect example. And I have to say they are the most, and I don't know if you agree with this, Jeff, but they are the most hideous patterns to try and trade. Horrible. Just so much emotion in those.
Generally, they go so fast. Yeah, absolutely.
Yeah. I mean, if you're in down here, you're obviously you're laughing because your trade just takes off. It's all good. Or if you're in up here, but yes, that is a V-shaped recovery, perfect. But trying to get in any later than down here, that's your last chance to get in there. Trying to get in, between this point and this point, pretty much impossible. So if you miss the first couple of opportunities, you're done with this trade, and that's why they're tricky, because they don't allow you to take advantage of a huge move. To be fair, really, really good move. That move is bigger than any of the moves that we've had, for the last 6 months, from top to bottom, from bottom to top. And yet you'd have only had one opportunity to get involved in that. So they're very, very difficult to trade. And I don't particularly like V-shaped recoveries, if I'm honest. That's not to say I don't like the volatility, but I like volatility in one direction, and then let things settle down, and then just carve the way back up again. I don't like it when it kind of goes bang bang, particularly, because it makes the second phase, the phase after that, it makes that a bit tricky to analyze as well, and you almost have to let this flush out, get out the system. Before anything else. But yes, great spot on that one, LT. That is absolutely a V-shaped recovery. This is almost the opposite of the V-shaped recovery in euro pound. So it would be a V-shaped recovery if you were looking at pound euro. They don't have a term for this, do they, Jeff?
Sorry, mate. Looking at the chart and do something else. They don't.
Yeah, but they don't have.
Let's call it an upside down V.
It's an upside down V-shaped recovery.
Which reminds me, I've got a question for you, and it keeps me awake at night.
Of course it does.
but that doesn't happen until the US session, so it reminds me of something that keeps me awake at night.
Yes, it is different to a tweezer top, Helen. The tweezer top is, and correct me if you see this differently, Jeff, but a tweezer top is a bar. It's a couple of bars.
So yeah, go to pound Aussie weekly chart, mate. That'll show you a tweezer top.
Okay, yeah, okay, let's do that. So there's your tweezer top. It's sort of it looks like a pair of tweezers. But yeah, let's have a look at that. Pound Aussie weekly, just so we can illustrate it for you live. There we go. Perfect. Yeah. See here? There and there. My screen's flashing. Is my screen all right?
Yeah.
It's flashing around. There you go. There's your tweezer top there.
And that's exactly what we traded, basically. £1 Aussie when we went down, we traded the higher low. Sorry, the lower high.
Another one here. Much smaller bars, but you can see that it's about the tail. You want the two tails, but it looks like a pair of tweezers. Just there. So there's a tweezer top. I've got my screen's flashing here, mate. I don't know why.
Looks okay on YouTube, and it's okay on my feed. So
all right, great. I wonder whether it's my. It's actually my screen, my monitor. By the looks of things. Not sure if that's about to give way. Okay, no problem. I'll tell you what. I'll pass you the screen, but I'm just going to switch to another monitor because this one is going to be.
Right, mate. I'll answer some questions and do a little bit of ferreting around the grounds as well.
Great.
Haven't spoken too much about currencies today. So let's do that.
Oh, that's strange. It stopped. Stop
Of course it has.
sharing and it's back to normal. That's okay. Well, at least I don't have to switch monitors. That's a good thing.
Might be a bandwidth issue, maybe. I don't know. All right, let's start with Aussie yen. I think Christina asked a question on Aussie yen. Is it time to go into the market? And I assume because you're you're in my camp here, you're looking to go long, Christina. Let me show you my thoughts on that. As you know, I'm massive bull the Aussie at the moment. And what I'm looking for, and in 1 minute and 17 seconds, there's every chance I'm going to place an order here. And it will be a long order. But is it right to go long at the moment on any other chart? Here's what I see. I see that we've had a bearish engulfing bar and a lower high, arguably a lower low, certainly a lower low than there. But we've gone into consolidation. I see the weekly pivot, I see the daily pivot, and I see a range that we've gone into. So on any other time frame than 30 minutes right now, I'm flat. I don't want to do anything. But I totally see the opportunity to trade to the top of this range on a smaller time frame. And that's precisely what I'm about to do, as long as I can get that candle right. There we go. How big is it? Here's the thing that we've got to watch, right? We've got to watch the size of the bar versus the size of our reward. And they're about equal, really. So there's the high of the day. We don't ever want to trade into the high of the day. Sorry, I don't ever want to trade into the high of the day without taking profit off the table. So let's place a very small order long here. And I mean very small. Don't go in any more than about 0.25%. Because if this does break out to the high side, you'll get a second opportunity, because it'll potentially break here, take the daily pivot out, then come back and retest it. That's where you want to get most of your money into the market if you are a buyer. So the entry level will be above that bar, obviously, at 67.94. 67.94, if I can see my keyboard here. It's very dark here suddenly. Oh, thank you. My darling wife rescued me. 67.94 is our entry level, and the stop loss. Always when I've got a candle like this that's forming, I like to pinch the low of that bar rather than the low of that bar. So let's pinch the low of this bar. And if it keeps going low, then it doesn't really matter. But 67.79 is the low of that bar at this point. So let's go with that as our stop loss. And we will place the order. It is a buy stop. Okay, now let me explain what you need to do next. When you get in the market here, if you get in the market here, you need to take profit before that high. So if you get slipped into here 4 pips, doesn't matter. You've still got to take profit before that high. This is how we trade, pardon me, the smaller time frames, slingshot style. It is completely different to just about anything you've ever been taught, but that's how we work it. And that's how we maintain a very high win-loss ratio. It's not fancy. It doesn't give you a great reward on your first part of the trade. But if we were to get up here, then that becomes a whole bit different ball game. So you can probably now move your stop loss below there. So just cancel the order and move your stop loss below the bar. If it continues to go, we're going to cancel the order anyway. So if it went down to here, we'd cancel the order. But you can now just follow that stop loss down, probably till it gets to there, and then cancel, as I say. So your take profit level has to be before that high. I would suggest 68.04 or even 68.05 would be your first take profit level on this. Okay, so I'm going to cancel that order and place it again. So let's go again. I wonder if you're following why I'm doing this. Okay, entry is at 67.94. Stop loss is now underneath this bar at 67.78. And we're good to go. Again, first take profit level has to be there. Now, the way I trade this is I'm going to take 50% off at that level and move my stops, whatever that is. If it's 10 pips by the time you get taken in. So if it's a 10 pip profit, you then want to move your stops 10 pips from entry, which would bring your stop up to here, up to this level. That way, you've got a completely free trade on your hands very quickly, or hopefully very quickly. And if we do go through here, come back and retest that level, I'd then scale into that above that bar. So above the break and retest. Okay, so that's how we build a position here. So this is more or less your security blanket, if you like, this first part of the trade. Okay, so Aussie yen, answer to your question becomes okay. I'm happy to trade it to be risk-free quickly, but I'm not happy to trade it through that level without taking some profit. So just build the position, I think, is the way to go here. Can I see a potential for this to be a W bottoming pattern? Well, it's not really a bottom at the end of the day, but this is, and I definitely see potential for this to happen. So yes, the answer is we can get into to Aussie yen now, but that's the way I would treat it, in that fashion. Tomorrow morning, if I wake up and we've still got this bar that's hugging onto weekly pivot, I would then, and let's say we get taken out of this trade for a loss, I would then place the order long above pretty much where that level is, 69.45-ish. And of course, the theory behind this is we've come off the bottom of the range and we're seeking a higher low. Do we have a higher low? Hell yeah. Got one there, got a higher high here, potentially another higher low here. But it's not clear yet on the bigger time frames, and that's why I prefer to trade on the smaller time frames. Okay, so that should fix that one. 0.25% is 0.25 if you're trading on your trade manager. Yeah, got it. Now there was a question about trade manager, and I didn't understand it. I think it was from you, Helen. Yeah. Do you manual or can TM or MS? I don't know what MS is. And if you're talking about the euro, you can manual, absolutely. You can trade manager, absolutely. But MS is a disease as far as I'm aware. And I really don't know what else it means. So
Managed
if you
stop?
can that. Sorry?
Is it managed stop? Does it mean
I
managed
don't know,
stop?
mate.
Oh.
I truly don't know. Helen will let us know. Market scanner. Ah, okay. Thanks, Jimmy.
Yes. I want to talk about the market scanner. Maybe later in the US show, I want to talk about the market scanner.
Oh, okay. Look, the only reason I use the market scanner is in the morning, so I don't have to change charts. But it's a wonderful tool, obviously, if you've got a use for it. But it's of no use to me as far as the slingshot trading is concerned. But absolutely use it if there's no reason why you can't. TP1 6805 time frame M30. Did I say 6805? Let me check that. Could well be. Yep, that's right, 6805. What what time frame? On Aussie yen is M30, euro dollar is H4. Have we got any other questions, mate, that I've missed?
Not that I can see, mate, no.
So we're all good. Look, just quickly through the pairs, and I'll give you my thoughts before we go. I won't dwell on them. As you know, all of you who have been around for a while would know, I am absolutely bearish on pound Aussie, just waiting for an opportunity to get back in here. Very interesting point where we are right now. If we maintain the daily pivot, the weekly pivot as support, as resistance, and we can't close above this level, we'll be ready to go short again. If, however, we break the weekly pivot, we may be headed for the monthly pivot, and that's okay. Don't have a problem with that. It still provides us, in fact, will provide us with a great price to get short again. Euro Aussie is almost setting up. I'd prefer it went higher, but you can see what's happened here. We've broken the high side of our range, and we've come back into the high side of our range. There may even be the opportunity, if you wanted to get in early here, to think about a trade right now based on that scenario. Actually, don't mind it. Yeah, the reward's definitely there. Okay, we're going to place a short on this, guys. Again, small risks because of the market conditions at the moment. I'm not putting anything major on the table right now. It's a sell stop. The level will be underneath this bar at 1.7263. And the stop loss will be, again, we want to go above this one at 1. Let me get that right. 1.7287. We might add spreads to that as well. 1.7290 becomes the stop loss. Okay. Now let me give you the management on this one. You would need to take profit, in my humble opinion. What are we risking here? Say 28 pips. I'd be okay with that level there. So let's call it 172.49 is your first take profit level. Again, you would want to take 50% off at that point and then move your stop loss 10 pips. I think it's 10 pips. So you're only taking 10 pips off the table, maybe 11 pips. Move your stops 11 pips from entry at that point, which would move you to about there, a little bit over halfway through that bar. That'll get you safe in the market straight away. Target, look, you've got two options here. One is there, and I would probably counsel you not to be greedy and take your profit there at 72.14 rather than wait for the daily pivot test. So that's how I would manage that. So just take everything else off. So your other half comes off it there. That will give you a result of 10 out of 30, so 1/3, say, and then you've got 1.5 there. It'll give you a little bit under, about 1-to-1 on the trade. If you want to take, actually a bit more than that, about 1.25-to-1 is the reward that you'll get off that. That's the interesting part about the slingshot and the way we trade it. It doesn't give you a massive reward for if you were to stay in. If you want to trade it aggressively, you can. And I'll mention that another time. But there is another way to trade. There's another 2 ways to trade it. But the conservative method is this one. So 27 pips to, you could double that, right? So instead of that being 2-to-1, it'll just be 1 or 1.1 or 1.2-to-1 if you take your early profit. That's the price you pay for that little insurance policy. The numbers are entry 1.7263. Stop loss is, can't remember that one. 1.7290. Okay. All good. I'm done, mate, I think.
You're all done. Okay, mate. Fantastic. All right. Well,
there's a few more I've got for the evening session, including Euro Pound and what was the other one? Can't quite remember. It'll come back to me. But Euro Pound's one I want to have a good look at tonight.
Great stuff. All right. Well, we're going to stick with the shorts with the FTSE. We should all be in that trade now and just waiting for the market to turn in our favor. We're around about 70% of stocks in positive territory. So, and it is drifting, you know, we're sort of going from 80 down to 75, 70, probably around about 66 now even. So we're just starting to weaken a little bit while keeping fairly stable. It may well be that we are waiting for the US numbers to come out before we go anywhere, but let's see what happens with that. But we'll be back in a few hours to talk us through the US session. I want to talk about to market scanner, so remind me about that stuff. And also we need to touch on the journal for you guys for this weekend as well, because it's important you guys get on with that for next week so we can start really analyzing these trades. Which pair was that, Jeff, in which time frame?
Euro Aussie 30 minute.
Euro Aussie 30 minute. There you go, Helen. All right, we'll be back in a few hours. Have a good break, mate, and I'll see you back in 4 hours-ish. 5 hours.
Yeah, something like that. I've got 2 webinars before that, but yeah, I'll see you then.
All right, buddy.
Have a good one, guys. If we don't see you later, have a great weekend and catch up sometime next week.
Yep. See you soon, guys.